Hello, friends. My name is Phil Goff. I'm with the Home Finance with Phil team. Welcome. I appreciate you watching. Today is January 26th of 2024, and this is the weekly market update. So let's go ahead and get into slides and see what we think about what the market's up to. This here's my information if you want to pause the screen and get a hold of me for any awesome reason. So Mortgage News Daily, I pretty much use these guys weekly. It's just a conglomerate place where they pull together a bunch of rates, and so you can see what the averages are. Our averages are really kind of staying pat. We've gone up maybe just a hair. We're right in the 6.9% rate for our 30-year fix, just the generically 6.20 for VA and FHA. I think last week we were at 6.15 for FHA and VA. So again, you're seeing a little incline, but nothing massive. We're staying right around the same places we usually are. You can see that in the chart here that we get from MBS Highway. You can see where we kind of had like the pinnacle reached right near the end of December. And then since then, things have kept relatively stable, but maybe coming down just a little bit. For those of you that are new or have never seen or heard from me, when we see red, that's bad. When we see green, that's good. So we want to see more green. We're expecting to see more green as time goes on here. We're expecting rates to drop. That'll be in the next slide, which is from Fannie Mae. So when we hear things from Fannie Mae, we take them rather seriously. They control a lot of the mortgage market, and their expectations is that this year will drop below 6%. Now, when they say that, I believe they're meaning 6% on the conventional 30-year rate. So that's a whole percent lower than where we're at right now. They do believe by the fourth quarter we'll be at 5.8% or somewhere in that range. If we close the year less than 6%, the housing market, I believe, will look quite a bit different. They're also expecting the home price index to increase. They expected it to go up 2.8%. They've adjusted it. So now they're saying they feel like home prices are going to be even higher, up 3.2%. Keep in mind, this isn't Texas. This is nationwide. So we are in a hot market. So we might see more incline than you would in other markets. Only time will tell. Unfortunately, I don't have a crystal ball. I would be way more rich and probably not doing this if I did. So as always, we talk about how the lower rates, they're going to bring homeowners back into the market. And when they bring homeowners back in the market, we're probably going to see a lot more inventory at the same time. I think a lot of the people sitting on the sideline are people that own houses, don't want to do that big rate change. They want to move, but they just don't want to go from 3.5% to 7.5% or something like that. So if we can get them closer to 5.5%, that might be the line. And if the average is around 5.8 to 6, we can get you to 5.5 through buy downs and things of that nature. So I think we're looking pretty good as far as that's concerned. Something that I think we need to all keep in mind. I think about it quite often, honestly, when I deal with clients between all of us, and that's data breaches. I've heard horror stories from title people. Hey, someone snuck in somehow through the emails and gathered some data, and man, they made out with some money, and we can't find them. That's why all that title insurance and all these things are going on. So there is a new data breach warning from security researchers. I mean, I don't know who they are. This is from Forbes, though, Forbes.com. They discovered a database that has 26 billion leaked data records. That's pretty big. It's the biggest found to date, they're saying. It involves Twitter, Dropbox, LinkedIn, Adobe. You can see the list highlighted down there. Something called Telegram. I don't know. I'm not young enough to know what Telegram is. So they're saying it even involves government organizations. So it's just important, I think, when we deal with our clients to make sure that we're doing some encrypted work. We have document uploads built into my email where you don't email me directly, but you click a doc upload button. It's an encrypted website that emails it to me. So it's like an encrypted channel. We also like people to use their mobile applications and things of that nature that are connected directly to applications. So it's something that we need to partner on so that we together as realtor and lender don't cause a problem that shouldn't be there. That's it for this week. Again, here's my information. I sure appreciate all of you watching. It is going into the weekend. This weekend probably will be better than last weekend because there's not as much rain, there's not as much sleet and stuff like that. So hopefully everyone's going to have a busy week and they can get out and show some houses. If you need to get a hold of me, if you have a question, it doesn't even have to be a pre-qual. I know like all you hear from lenders is, hey, give me business. Where's your pre-qual? Don't necessarily need that. I'll be around. You can text or call me. My team is around also if something comes up or you really do need a letter or something of that nature. But otherwise, go out and have a good week. If I don't talk to you again between now and next video, Appreciate you watching and have a great one. Bye.